welcome to Zee Commodity Capsule, a segment we have designed particularly to wrap up the entire week's activity in commodity markets for you. Gold and silver have been making headlines for their record high breaking spree. Starting with gold, we have seen the yellow metal trading near its record highs, whether international market or in the domestic markets. As far as domestic markets are concerned, we saw MCX trading very close to 62,000 levels for 10 grams, and as far as international markets is concerned, in fact it has been following its international benchmark where we saw it touching past $2,080, which were last seen 3 years back, that is in August 2020. So clearly we can say that in both the markets, whether domestic or international, gold has been trading near its record high levels, but it's not likely to stop here. More is there in the kitty. $2,100 is most likely to be seen in short term as far as international markets and international market experts are concerned. And as far as the domestic brokerages with whom we spoke, they also feel that 62,000 and 62,500 are most likely to be seen in short term. Now, what are the factors that have been underpinning the price rise in gold? First of all, Federal Reserve has already hiked interest rate, but market now expects the central bank to potentially pause its year-long rate hikes. Now, weakness in dollar has also been a major factor which has contributed towards gold's rally. It is trading around 101 levels and it's on track to finish this week on the lower note. In fact, World Gold Council came out with its quarterly report and it clearly indicates that the central bank's aggressive buying is here to stay. For the period of Jan to March, World Gold Council reported that the central banks globally have bought around 228 tons of gold, which for this particular quarter has been one of the biggest purchases ever seen since the year 2000. Not just this, even China's jewelry demand was registered at 198 tons, which has been the most for any quarter seen since Q1 of 2015. Not just this, if you see yellow metal, now it is set to gain more than 3% for the week, and this is going to be one of the best weekly gains that the yellow metal is going to register in past 2 months. It's headed for $2,100 as I said, and domestically 62 to 62,500 levels are more there in the kitty in the short term. Silver is not far behind. It is following in the steps of yellow metal itself. It is again hovering close to its record high levels as far as domestic markets is concerned, and in international markets it's trading past $26, which is its 13-month high. For the week, we can say yes, this is going to be its first weekly gain in past 3. Strong momentum because of softer dollar and the growing recessionary concerns continue to underpin silver prices. As far as crude is concerned, this commodity has again made to the headlines, but for all the reasons that are taking it downward, southward. Why do we say this? Because crude has suffered one of the worst weekly performances in this particular week. Both for Brent and WTI crude, they are now on the track of its third weekly drop and have registered almost 8.5 to 10% weekly losses so far. Markets cracked lower because of the fears of weakening US economy and the slowing Chinese demand. In fact, Morgan Stanley has also lowered its Brent forecast for the year end to $75, and to many brokerages that we spoke up with, they see that Brent crude will now likely see a range of $65 to $80, with $65 approaching first in the coming 1 or 2 months. Coming to metals, they continue to be haunted by weakness. LME copper is on track for its third consecutive weekly drop. Tepid demand in China and the improving supply continues to weigh upon the red metal. China's factory activity unexpectedly contracted in April because of the falling orders, and in fact for the first 3 days during the month, China was on its national holiday, and when it came back, it produced some very unexpectedly bad numbers as far as the factory output is concerned, and that soured the entire mood for the base metal market. Poor domestic demand continues to drag and weigh upon the manufacturing sector, and there are no improving or recovery cues that we see from its crucial property market. Iron and steel rebar prices in China continue to extend weakness towards continuously they are hovering lower and towards the 6 months low. And for that matter, the other base metals, LME, aluminium, nickel, they also seem to be ending the week on a lower note. In fact, International Nickel Study Group came out with a forecast of supply surplus that could be seen amounting to 239,000 tons, which is supposedly the largest anyone has seen in past 1 decade. However, the week wasn't so bad for agri commodities. Most of the agri commodities, be it grains, oilseeds or edible oils, are set for a positive weekly closing. Malaysia's palm oil inventories for April end are forecast to be dropping to the lowest level in 11 months. So that seems to be supporting the market, which is why Malaysian palm oil has recovered and seems to be ending the week about 5 to 7% higher, and it has managed to recover from its recent 7-month lows. Chicago corn futures, that's the seaboard corn, is also poised to end the week with some gains after having dropped to 9-month lows. Cancelled sales to China and of course the strong competition it is facing from Brazil continues to cap the gains for seaboard corn futures. Wheat is once again on the track for its first weekly rise in 3 weeks. Market continues to be supported by the uncertainties which we are seeing over the Black Sea export deal. But the commodities, the agri commodities which are going to be ending the week on in red or in a weak territory are global sugar and coffee. Yes, they have been making the headlines, starting the headlines because of their record high prices, but now investors are unwinding their long positions following a rally that saw raw sugar going up to 11 and 12-year high of $27 in the last month. Lower sugar output in India, Thailand and major sugar producing nations continue to support the prices, but now some liquidation in the positions, in the long positions, is pressurizing the markets. Same is the case with ICE Arabica coffee. It has been slipping for the past few sessions due to demand concerns and bets that prices have now peaked. Now prices are hovering near its 4-week lows and they seem to be dipping nearly 3% for the week. That's all for the week, and hope you get some idea of the entire week's commodity activities. We'll see you next week.